Yo, what's up, everybody? It is Thursday, November 14th. So Powell, I guess he threw some cold water on the rally today. His comments basically saying that, hey, look, the Fed doesn't have to be in any rush to cut rates with the economy as strong as it is. So we saw a drop in the probability of a rate cut in December. Yesterday it was like 85% probability of a rate cut in December. After Powell made those comments today, it was down to like 58 or 59%. So that's a pretty significant drop in a day. And of course, you know that the monetarists, they just, they're triggered off of anything that comes out of the Fed, anything that comes out of Powell's mouth. I mean, we know this. And I've spoken about this many times in the past, how I like to go against emotional reaction. But this particular comment it's interesting to me, and I might be getting way off track here, but you know, last week when Powell was asked by somebody if he would resign, if Trump asked him to resign, he said, no, I will not resign. So I don't know if there's a little thing going on there, at least in Powell's head against Trump, that he's, you know, it's kind of like a quiet little revolt against Trump or whatever, or just, you know, tacitly saying, hey, look, I'm the Fed chair. You can't touch me. I'm going to do what I want to do. And, you know, Trump has spoken about the need for lower interest rates. As a matter of fact, during the Trump campaign, when he was asked by people, like, what are you going to do about inflation? The first thing that came out of his mouth was, we got to get interest rates down. So we know where Trump stands on interest rates, and it's just, I find it curious that Powell, first he says, no, I'm not stepping aside if he asks me to. And he was very defiant about that, the way his tone and everything like that. And now today he's saying, hey, you know, we don't have to lower interest rates given what the economy is doing right now. So we'll see. Right now, the fiscal flows, I do not see any slowdown in the fiscal flows whatsoever. As a matter of fact, it looks like they're gradually moving higher year over year. So that's bullish for risk assets. It means it's bullish for stocks. It's bullish for gold. It's bullish for commodities, even though we saw a correction recently in gold. And I was keeping my hands off gold, but, and I was expecting this correction. I was telling you guys that, you know, we had producers in gold who were holding like very, very large, I think even record short positions in gold futures. So I was anticipating this, and actually I was not even going to make a play in here because I thought with the economy, my outlook anyway, the economy's slowing down, gold's going to go down more. But with these fiscal flows the way they are, at least right now, I think this sell-off that we saw in gold was probably the worst we're going to see for now. I don't think we're going to see much lower. Whatever the low was today, I don't know, 25.50, 25.60, somewhere around there. Same thing for silver. If you get it back under 30, I mean, that's a good buy for now as a trading move anyway. Same goes for Bitcoin. I mean, Bitcoin was down a little bit today, but these fiscal flows are very strong. And I think and that goes for stocks, risk assets, that includes stocks. I think today's sell-off. Tomorrow, there's a quarterly interest payment. So the system's going to be full of cash. And that should be bullish. Whatever happened today on the downside, I think, you know, if we don't reverse that completely tomorrow, then over the next couple of days, we probably will. Sentiment, if you look at sentiment, it's really not all that bullish. Pretty incredible. You would think that after what we saw after the election and that kind of you know, stratospheric rise in the market, that you would see some really, really elevated level of bullish sentiment. It's just not there. So I think the conditions are there for a continuation of this rally. We're going to have to see what happens next year. I mean, right now, the drop in interest income transfers, I talked about this yesterday, while that is happening, the drop is small. And, other spending is offsetting that by a pretty big margin. So, I mean, these small rate cuts, while they are having an effect on interest income transfers, it's not enough to wipe out the increase in the spending. And, I always tell you, spending is the first derivative of all economic activity. That's the core of my analysis. And I don't see any condition here right now that would say, the economy is really going to slow down. I mean, I would want to see those numbers really start to decline, and that's just not happening. As a matter of fact, it's going in the opposite direction. So, short update for today. Not really much to talk about. I think when we come into next year and the Trump presidency, and we're going to get some big changes, big changes policy-wise, things are going to get very interesting. Things are going to get very exciting. There's going to be a lot of opportunity. And if we do see these interest income flows, like right now, you need to have that drop like 30, 40 billion year over year. And, we're down nothing, like 10 billion. I mean, those transfers really have to come down to take away the additional spending that's going into the economy right now. And if the Fed holds tight, if it doesn't do another rate cut in December, it's just going to take longer for those interest income transfers to fall. And that was my whole premise, at least for the fourth quarter and into next year. Into next year, we have other things, all right? We have smaller increases in the COLAs for Social Security, all those programs. We have the expiration of the Trump tax cuts, but I'm sure he's gonna extend those. I'm absolutely sure that's going to happen. I've said that the wild card is the DOGE, the Department of Government Efficiency with Elon and Ramaswamy. I mean, I'm very curious to see, where they're going to find these efficiencies and what's going to actually get cut. So there's a lot of question marks next year. But right now, my main the main point that I was focusing in on was really the rate cuts. And while we've had 2 rate cuts, and while there has been a drop in transfers, it's not that big right now. It's just not that big. So anyway, tomorrow, again, to repeat, we get a quarterly interest payment. That's a very big injection of money into the economy, and that should be bullish. I mean, we should get a pop. And as far as bonds are concerned, they're going to stay. I mean, yields are gonna probably creep higher. I mean, if the Fed holds right here at 8.5 to 8.70, 4.5 to 4.75 on the funds rate, you could see the 10-year trade back up to 4.75 yield. I mean, if the Fed holds here, you see the 10-year going back up there. I mean, there's no problem for it to go back up there. I was anticipating at least another cut in December, which would have brought the policy rate down to 4.25 to 4.5, and then I was saying, well, 4.5 should be the high end of the yield. So you want to be buying bonds here. But now with him saying this, I mean, things could change. We have to see, more of the economic data, but I'm kind of skeptical now because based on these flows being very strong, I don't think we're going to see much weakness in the economic data right now. Anyway, that's it for today, folks. Please like and subscribe. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. I'm the only one who has an applied approach to MMT. I take the concepts and understandings of MMT and I show you how to use that to invest in the financial markets. See you tomorrow. Bye.